LG Electronics IPO. After a prolonged delay, finally LG Electronics is coming up with its IPO. The issue size is 11,607 crore rupees and it is purely OFS. There is no fresh issues which is going to the company. LG Electronics does not need any introduction. It is a leading Indian household brand of electronic goods. Be it refrigerator, be it TV, be it AC, LG has a legacy in all the electronic goods in India. If you are new to this channel, I am Harshith Shetty. In the next 5 to 7 minutes, we are going to discuss about the business, revenue growth, margins, valuations and my verdict on this IPO. Without any delay, let's start. Before we begin, if you are new to this channel, subscribe to my channel for financial content without any nonsense. I personally invite you to join my investor community with over 2,500 smart investors who benefits from real-time market data and market insights. Link given in the description and the comments. As you all know, LG is a very popular brand in India. Before talking about the business model, here is the snapshot of IPO. The IPO starts on 7th of October. The total issue size is massive 11,607 crores. Entire issue is OFS, offer for sale. The parent company of LG is offloading 15% of its stakes. No fresh capital is flowing to the company. The issue is expected to list on October 14th. Now let's talk about the business. As you all know, LG is a very well-known brand in India. It commands a strong and substantial market share in offline channels. To give you a perspective, it has a strong 35% market share in washing machines, 30% market share in refrigerators, almost 28% market share in TVs, 20% market share in inverter ACs, and more than 50% market share in microwave ovens. This gives us a perspective of how strong hold LG has in India. To support this, LG has a strong distribution and service network all over India. It has more than 35,000 touchpoints all over India and more than 1,000 service centers. More than 13,300 service engineers ensure same-day installation and maintenance services all over India. This shows a very well-structured and strong business model of LG. LG also has manufacturing presence and backward integration in India. It has low dependency on outsourcing by having large plants and in-house components. All these things give LG a clear moat and a very strong brand identity. Now let's talk about financial metrics of last 2 years. In the last 2 years, LG has shown a fantastic financial numbers. Its revenue has grown at a rate of 10.8% CAGR in last 2 years, whereas PAT, profit after tax, has grown at a staggering 27.8% CAGR. These numbers are outstanding. ROE and ROCE of this company has been excellent. It is at 36.9% and 50.1% respectively. These numbers are excellent and outstanding. Now let's talk something about valuations. Post IPO, LG commands a staggering 77,000 crores market cap. P ratio of this company is nearly 37.7 times, whereas PB ratio is nearly 4.28 times. These numbers clearly says that LG is commanding very premium valuations. Taking all these into consideration, SBI Securities has given subscribe rating for this IPO. P ratio is more than 37, which is also lower or competitively placed when compared to some of its peers in the market. Following are the ROE comparisons of the market peers. Havells has a ROE of 17.7%, whereas Voltas is having a ROE of 12.9%. Blue Star is at 19.3%, whereas Whirlpool is at 9.1%. LG commands a very premium valuation. But the argument here is this valuation is justified by the superior returns, scale and brand value. If we talk about GMP, current GMP is at 146, which suggests a potential listing gains of approximately 10% or more. But we need to understand that GMPs are not fundamental metrics. They tend to change as per the market sentiment. Now it's time to discuss about the key risks and challenges of this IPO. First of all, LG could face challenges in raw materials and input cost volatility. 70% of its cost is from parts. We must also consider commodity swings as well. LG has to pay royalty to its parent company. It comes approximately 1.9% of the revenue. It is also a recurring cost to the company, which also affects the margins of the company. Consumer discretionary demand cycles and competition is also another factor which is a risk to the company. LG can face cyclicality of this business and it has a tough competition from Samsung, Whirlpool, etc. This IPO is fully OFS. There is no fresh capital to expand the business or invest. So all the future growth is organic. And finally comes overvaluation risk. Since the IPO is overvalued already, if the growth or the margin shrinks, there could be a very steep fall in the stock price. So what should I be doing in this IPO? Here is my final verdict. Before I say my verdict, here is an update to you. I am now official channel partner with Motilal Oswal Financial Services to give you demat and trading account services. If you are looking for a well-guided investment journey with the research-backed recommendations, consider signing up with Motilal Oswal Financial Services. Follow the link given in the description and comment section to get full access to my Discord channels where you get stock recommendations, swing trade ideas, intraday trade ideas directly from India's top research desk, Motilal Oswal Financial Services. These recommendations will help you to place your trades and investments with research-backed recommendations. So let's come back to the verdict now. Taking LG's superior financial metrics into consideration, I am going to invest in this IPO if I am having medium to long-term investment horizon. That is because LG is a high-quality case. I am going to bet on its brand value, distribution network, service history, and consumption story of Indian economy. Many other institutions has also given subscribe rating for medium to longer term horizon. But here take a very conscious note that the valuation is very aggressive. If you are a short-term investor looking at listing gains, there is a possibility of listing gain as well, but it is not guaranteed. Current GMP is at 146 rupees, which is approximately suggesting a 10% or more listing gain. So best strategy for those people who is looking for listing gain is to wait for third day, look at the market direction, look at the subscription figures of this IPO, and then place your listing gain bets through this IPO. So if you are an investor who is not comfortable with premium valuation, it is better to stay away from this IPO. You could wait for future results and valuation corrections if market offers that to you. So if you found this video helpful, like this video, subscribe to my channel and drop your views. Join my investors community with over 2500 plus smart investors, link given in the description and the comment. And if you are looking for a very structured and well guided investments, consider signing up with Motilal Oswal and gain access to all my Discord channels where you get all the recommendations from the Motilal Oswal research desk. And finally, I am AMFI registered mutual fund distributor, not a SEBI registered research analyst or RIA. This content is purely educational and not recommendation. I will be coming back soon with listing gain strategies of Tata Capital and LG Electronics IPO by the weekend. Stay tuned. Thank you for watching.